Hello, everyone. My name is Corinne, Director of Marketing at Direct Bullion, and thank you for joining us on today's webinar, Utilizing Gold and Silver for Optimal Portfolio Diversification. Our presenters today are Samuel O'Brien, President of Direct Bullion. With 10 years in high-level client-focused position, Sam founded the U.S. branch of Direct Bullion in 2019. He is driven to provide the highest grade service to all clientele. His passion for customer service is echoed in the entire Direct Bullion model and visible in the team's top-notch training. And we're also joined by Michael Corcelli, Chairman and Founder at Flya. Mr. Corcelli is the founder and chairman of Flya and has played a critical role in establishing the vision and building the management team for the Flya. In addition to his work with the Flya, he is a managing partner at Alexander Alternative Capital, LLC, based in Miami. Prior to joining Alexander Alternative Capital, Michael worked for UBS AG, where he was responsible for portfolio management and tactical asset allocation for private clients of UBS Global Wealth Management and Business Banking. Michael holds a Bachelor of Science from the University of Miami, where he studied business with a focus in finance. For those of you who aren't familiar with Direct Bullion is a leading precious metals dealer specializing in high net worth individuals. Recognized as one of the world's best precious metals companies in the HNW individual sectors by Spears 500. Although best known for their work in HNW individuals, Direct Bullion offers all clients the same high levels of service, low margins, and ensured delivery on all orders. Whether a customer is buying a single coin or filling a vault, clients are able to buy online through our well-stocked e-commerce website or directly through one of their team specialist brokers, and all under the industry-leading price match promise. And finally, a few logistics. This presentation is being recorded. The recording and slides will be provided to everyone within 24 hours of the webinar in a follow-up email. And if you would like to ask a question, please feel free to do so below by typing them to the question box for our presenters. And without further delay, let's turn it over to Michael and dive right in.
All right, Corinne, thank you so much. Thank you for all attending today, joining us. Sam, thank you. And thank you to Direct Bullion for being a member of Flya. As many of you may not know, I've been a long buyer of physical gold. And I'm really excited today to get into this conversation. But before we do, Sam has a short presentation that he's going to go through. And Sam, before you get into that, give us a background on Direct Bullion and yourself.
Yeah, so Direct Bullion, we are a London-based company, started in London in 2015. My business partner, Paul Withers, engineered the idea. Effectively, what we saw a gap in the market with the UK bullion companies was that bespoke service that you can offer clientele. Really, we saw, overpriced dealers, and we saw, purely web-based sales, and there wasn't that much in between that. So we did fit into that market, and we started with a single office in Mayfair in London. That's now expanded. We have another office in Canary Wharf, the financial district in London. And yeah, things took off very, very well. I think since 2015, if you look at the gold price and what that's done, it definitely helped with the growth. And then we did decide to move out to the US in 2019 in Florida, mainly because we saw in the UK, we saw a lot of people with retirement funds. They wanted to move that into gold. And then obviously, if you look into the US, you have a lot more people that have IRAs, 401ks, and we thought, that market is a lot bigger. We want to try and get in with that action as well. And it has done very well. Since we formed it, we've won various awards doing so, and things seem to be going well. We've not just sort of supplying individual coins and bars for individuals, but we are now supplying for institutions, and in some cases we're actually manufacturing some products as well. So we are catering for as much as we can right now, and yeah, I mean it's a great time to be in business for us.
So Sam, do you want to take a moment, go through your presentation, and then we can get into some Q&A. Just to let the audience know today that we want this to be an interactive discussion, but perhaps, you can basically set the stage for everybody by going through some slides that you have top of mind.
Perfect. Yeah. Can we get the next slide? Okay, so I think today, with most of the investors that we get, it is really of like, we have funds there. We don't see any funds that are, if we save money right now, we don't get any rate of return. We don't want to hold paper money. We don't want to, we don't want to keep money in CDs or just keep money in dollars because of how much it's devaluing. So obviously people look for places to invest. We have, bonds, we have gold, and we have stocks. My opinion on obviously the stock market, I think it's not my expertise, but we have seen a fantastic bull run for the last sort of 11 years. Yes, we did have a bit of a correction last year, April, but since then, we have seen it just go from strength to strength to strength. And if you look at cycles, I think that a lot of people are suggesting right now that this could be coming to an end. Historically speaking, if you do look at any sort of stock market correction or crash, then in the period that follows that, gold does rise, and it can be quite significant. If you look at the last recession that we had, 2008, the gold price went up astronomically in the from 2007 really through up until 2011, where we hit our all-time high at that point. So I think a lot of people are noticing that, and people are obviously concerned about if they have rode the stock market wave for such a while now, or if they do hold money and just pay in fiat currency, and they're concerned about that. So I think that gold obviously does offer that hedge against that, and people feel secure, and I think that's why a lot of people do want to look into gold right now. Can we go to the next slide? So inflation is a big point right now, and I think that we're noticing this in everyday life. I think that the cost of our shopping's going up. My family are in the construction trade. If you're looking at the lumber prices, they've gone up astronomically recently, and I think that we are seeing the cost of living going up at a rate which could be increased in the short-term future by substantial amounts. And if that does happen, then obviously where we are leaving our funds right now is crucial, because if we are just leaving money in dollars, or if we are leaving money in other vulnerable areas, then it's not going to keep up with future costs. Many clients that we have, they are planning for retirement, or they are planning to sometimes leave their children inheritance and whatnot. And no one wants to give them worthless banknotes. It's just something which no one feels like they're doing themselves or anyone justice by doing so. So I think that really with gold, it has served the test of time against inflation. And that is why people normally do look into buying it. Where would you normally feel more secure, with your money in banknotes or with your money in gold? And I think a lot of people do like that security that comes with it, especially over long periods of time. Next slide. So we do have obviously an uncorrelated alpha. The quotes that we have here: so precious metals, not only a good portfolio diversifier, but historically do well when inflation is high. As the value of the dollar goes down, it costs more dollars to buy the same amount of gold. And this is what a lot of people do normally say to us when they're purchasing. Well, if they're just getting into buying gold, they're like, we see a lot of people where they are buying in large quantities and normally at one time, because they know that if they are waiting, especially if it is a bull market and it is going to go up as much as we anticipate, then you will be buying the same amount of gold, but it's just going to cost you a lot more. And that's why obviously right now, yes, prices aren't the lowest they've ever been, but I think in comparison to what's going on, it does still look very undervalued. There is also a quote from the World Gold Council. In 2020, uncertainty and fear regarding the potential extent of economic damage from ongoing COVID-19 epidemic contributed to continued demand for gold and growing prices. With stock prices plunging and commodity prices collapsing in response to the pandemic, investor confidence in capital markets is low, and more investors are turning to gold. Since the pandemic, we saw demand, it was astronomical. In London, in the UK, and also in the US as well. We've never experienced, a buying frenzy like it. And it was almost immediate, from sort of January of last year, when we finally sort of understood what COVID was and what impact that was going to have. People were running for the hills, and they were buying as much gold as they possibly could. I think also we did hit a point during COVID where we did have a lot of key mines shut down, and that did, it did restrict the amounts of supply as well, of how much we could actually get. Silver mining production's almost halted at one point, and it is these lower production levels that we had because of COVID, which we are kind of still paying for today. Many dealers across the US and across the world, especially silver this year, we're still feeling the effects of that. So it is really supply and demand. The supply was dwindling a little bit, and demand was going through the roof. So there was only one thing that was to happen to the price. We did see an all-time high last year. We did have a bit of a correction, but we have reversed all losses so far. I think today my last check was 1898. So we're still at a very solid foundation, and we are interested to see where it goes. Next slide. So current market statistics. So this is really just looking into how much we do represent, and the global precious metals market size was valued at 182 billion in 2019, and is expected to grow. And we are always seeing increased buying of gold. And I think a lot of that, and silver as well, a lot of that is also industrial usage driven as well. But there will be an interesting point that we'll come to later where we see that how important physical gold will also play a part in that portfolio, as opposed to a lot of the transactions today that we see are sort of paper gold, unallocated gold. So we think that the US gold market is home to the largest physical gold market, comprising some of the world's largest wholesale gold dealers, bullion banks, as well as extensive gold mining and refining. Next slide.
Sam, before we get on to the next slide, I want to jump in with some Q&A that we got from a registered investment advisor. She is asking, what are the benefits of physical gold over gold futures or ETFs?
Okay, so this is interesting because there was, which has been over the press in the last sort of week, Basel III, which was implemented after the last recession, and it was effectively there to police banks and make sure that we're not, over leveraged and whatnot. And as I was just mentioning, a lot of transactions today are on unallocated gold, so gold which is sometimes leveraged, over 100 times. There's no official owner of that. There might be multiple owners and whatnot, and it's about to be deemed to be obviously very risky. And with this Basel III framework, physical gold will become a zero risk asset. There is no counterparty risk on physical gold. You own it outright, so it isn't over leveraged. We know that obviously if something is sold 100 times over, as we saw in the last recession, but with obviously different products, then there is a lot of risk there, and that is something which we are trying to make sure doesn't happen again. So I think there will be a huge push for physical gold because of this. I think that one of the true things about physical gold is that you do own it outright. It is there. No one's going to take that away from you. ETFs, in my opinion, you're not always seeing the true growth of gold. There is some hidden management fees in there, which sometimes can be ignored. Premiums, I think this is one misconception as well, is that if you're buying ETF, it's the cheapest way to own gold. It's not always the case. We was approached just earlier on this year to ask if we wanted to open up a gold ETF, and they were saying, premiums on it, you can charge whatever you'd like as long as you document that. And I think that the fact that someone was to say that to us, we was like, oh, but I don't understand. Like, surely there should be some regulation in place with that, but there isn't. So I think that if you are buying gold, you're buying it for a reason, and that is for security. And I think that a lot of the ETFs out there, especially in the next few years as well, when this Basel framework does kick in, I think it's going to be very hard to own paper gold. And therefore, right now, if there is going to be more of the funds that are spent on paper gold, physical gold, we're going to see a huge increase in price as well, because it will have to.
Sam, what about the futures? What are some of the risks associated with like futures and futures exchanges, of not being able to get delivery, for instance?
Is this on physical gold right now, or on ETFs?
On physical gold, like the exchanges that trade futures on gold, but where you can demand delivery of the gold. What are some of the risks associated with that?
Well, the risks are that if you have a fund and you do have that policy in place where people could take delivery of it, I mean, the obvious risk is that it might not all be there. Everyone could go to collect that gold, take delivery of it at one time, like we saw. We've seen people rush into the banks before to try and get their banknotes out. It would be the same with gold in that instance. And if that was to happen, the likelihood of everything being there, in my opinion, would be very slim. I just think there's no way on this. I've seen various publications recently saying that these ETFs or these funds, which are supposed to be physically backed, and do have them policies in place, that there's no chance that everything's there. It's just incredibly unlikely. So I think that's the obvious risk. And again, that's something which you're never ever going to run into with physical gold, because you have delivery of it. It's vaulted under your name. No one else has claim to that. So if you did ever want to take that out, you know exactly where it is. You take it out. There's no one else trying to get your bar or coin. It is yours.
All right. So I didn't mean to interrupt your presentation. The question came in at a good time. I hope that fully answers your question, Teresa. So Sam, do you want to get back to your slides, or?
Yeah, sure. Yeah. What's the next slide that we have? Because we've touched on this. So this is Basel III that I was just mentioning. This does come into place for European banks on the 28th of this month. So we are already seeing a lot of central banks buying up a lot of gold, a lot of physical gold ahead of this. In the UK, it's implemented January of next year, and we do think that it will be a major change because of if they need to have physical gold in their reserves, then what has been documented in the past, and many people have gone to prison for faulting it, but we've seen a lot of artificial suppression of the price of gold and silver because it's in their interest to keep the price down. Now, if that flips on its head and it's now, if you need physical gold in, for your balance sheet, then it is in your best interest to raise the price of that. So we could see a bit of a reset in the price of gold. It could command a brand new charge. And if it was in major banks across the world's vested interest to have a higher balance sheet, obviously for many reasons, then of course we will hopefully see an end to some sort of suppression of the price of gold and silver. And if it does go up to them sort of levels, we could be looking at 2,500. We could be looking at 5,000 an ounce because they are controlling it to some degree. So if it is swinging and it is going in our favor, then I think that could be a huge positive for anyone owning physical gold. Next slide. So cryptocurrency, I mean, we should touch on this because we do get questions every single day from clients talking about cryptocurrency, and there's always a debate as to, is cryptocurrency going to replace major currencies, and therefore is there a real need for gold? I think that we've seen definitely in the last month, with Bitcoin alone and all these other smaller coins coming up and down, that it's still incredibly volatile. And in many of our clients, I'd say that the large part of the high net worths that we have are age sort of 50 plus, and the amount of these people that that are looking into cryptocurrency in a serious way is still not that large. We do understand that there is definitely some major benefits of cryptocurrencies there, and it definitely could be part of the future. But I think for now, anyway, I think gold still for me is primary. That's where I think a lot of people are still looking for safety in gold. I mean, how can you put your money into cryptocurrencies when they could be halved, overnight, just because Elon Musk tweets saying that he's not gonna use that mode of transactions anymore. So I think that, again, I think that it will be part of the future. Maybe gold-backed cryptocurrencies or something backed, but right now I suppose a lot of people's fear is that it is just very unknown. No one's really controlling it. There's a lot of people making money off it, but there's a lot of people losing money off it as well. So right now, I think it's still very scary for a lot of people. The reason that people buy gold normally is not to make money, but it's to protect their money. And I think that with Bitcoin and cryptos, it's, right now I feel like it's more people that are trying to get rich quick. So I think that there's two very different philosophies as to the reason why people buy. And yeah, maybe in the future when it is more stable and it is used more commonly for transactions, then yeah, for sure, it could be part of the future, but maybe 20 years. Next slide. So when we do look at what we normally supply clients, we have several different options, but effectively we are looking at either gold bullion coins or gold bars. With coins, obviously, there are different shapes and sizes for it. Mainly people do like coins because they seem to be more liquid. The cheapest way to buy gold will always be physical gold, that is, will always be to buy the largest bar that you possibly can, depending on the amount that you're looking to spend. The only problem that comes with that is obviously liquidating it in the future. If you are spending 100,000 on one bar and then you want to sell a portion of that, then you do have to sell the whole bar. And obviously buying and selling, there are going to be transactions involved with that, and you're going to lose a little bit of money. So it is always better to buy something which we feel is a bit more liquid or diversify around it. But on gold bullion coins, premiums can be low. There are other products which people do look to buy, which are deemed a bit more collectible. It is a bit of a tricky area because someone could believe something's highly collectible and have a great value on it, and the coin has a huge premium on it, but trying to get someone to pay that in the future might be a bit of a tricky task. So the safest way when you are buying gold, coins and bars is always to buy, as close to spot as you can, but making sure that it is LBMA approved. It is obviously, it is genuine and it is exactly what you say it is. And that way you are playing with a spot price. If you are looking into collectibles, then it's something which you really need to know what you're doing, and you need to know where you can sell it in the future as well. Just to touch on IRAs as well. So, in the US, people are very easily able to convert their current IRAs, retirement accounts, Roth IRAs into precious metals. Within that, you can buy gold, silver, platinum, as long as the finest meets their requirements. So, it's 0.999. Only exception is American Eagles. And we do also facilitate that. Right now, and especially this year, we've seen, great amounts of money moving out of where people have held previously IRAs invested in the stock market. And we're seeing a lot of people want to convert that into physical gold or silver. The only sort of snag with that is that some people do want physical delivery of it. When it is held within an IRA, it has to be held with a custodian in a vault which is approved by them. Should they want to get it out in the future, then obviously we'll pay normal taxation on that. But yeah, I think it's a great thing that people can do, especially if they are fearful of their retirement accounts. If you look at how much gold does appreciate in the longer term, then people see safety on that. The only downside really is that it's not going to pay you a dividend or anything like that, but hopefully the capital growth can make it part of your portfolio really work for that as well. And yeah, it's a great, simple and straightforward process. Next slide.
Sam, we do have a question coming in. Bullion bars versus bullion coins, which would you say is a better investment?
That really depends on the client's goals and what they're looking to achieve on that. Coins do offer flexibility. They're in great denomination amounts. People that are often, especially right now, an ounce of gold is a coin is going to cost you say $1,950 or $2,000, which is not a bad amount to transact in. But coins of smaller sizes, you can buy it as small as 1/25 of an ounce. People that are buying for their retirement and for their future, it might not be such a bad idea to buy quite a few of these coins, because then if they do only need $1,000 each month or a few thousand each month, then it gives you more flexibility. The only negative really is that it does cost the same normally for these mints to produce a 1/10 of an ounce coin as it does for an ounce. So the premiums, the smaller that they get, the higher that you're going to pay over the spot price. So you are going to get less gold for your money if you are buying smaller coins. 1 ounce coins are normally pretty well priced. And then the bars themselves, they will be cheaper than coins normally, because it doesn't have any other value in it other than it just being a bar and just being pegged to the spot price. But some coins as well, some coins are very interesting. The coin market itself is very large. A lot of people are coin collectors. A lot of coins do have a numismatic value in, and sometimes that numismatic value can also go up quite significantly. So again, you have to know what you're buying. It has to be the right coin. Right. But coins which do look like they have a good track record, or they do look like they will have good future demand for them, and they're not just one of a million, then for sure they're always worth buying. Again, especially if you're not paying too much of a premium on it, and if they are worth more because of that numismatic value in the future, and you're only really paying around spot price, then great. And if they don't, then you're still you're only paying a couple bucks more than a bar anyway. So yeah, I think there's benefits to both. We do see a lot more demand for coins than bars. Private investors. Right.
And a follow-up question on that is there a bullion coin that you recommend? Which would be the best bullion coin to buy, if you had to say so?
Right now, I'm not biased, but I am from the UK, and I do have a wealth of experience with some of the UK coins that have been produced. Right now, there has been a new release of a coin which is called the Queen's Beast Completer coin. The Royal making coins for well over 1,000 years. They produced their largest coin ever, which was a 5 kilogram coin, which sold for extraordinary amounts. And that was to conclude a series which they released called the Queen's Beast. It was a 10-part series starting in 2016. And each one of those coins, which they released every 6 months, on average 2 a year, all of them sold out pretty much immediately. And they've all gone up quite substantially. The first one was probably released at around $900, $1,000. Today, if you could buy one of those, it would probably cost you around $3,000 for a loose example. A graded one might be almost double that price. And they did produce a fairly limited amount of them. It was only sort of 5 to 10,000 of each one. And the completer coin, which I just mentioned, the 5 kilo one, they've also released that in 1 ounce denominations. It's a fabulous coin. It costs the same as a Britannia if you're buying a loose example of it. So I think that's a strong play right now, because they will, they've had great press across various news channels and whatnot. They've got great past performance for the last 5 years, piggybacking off all the other Queen's Beasts that have been released. And this one does sort of complete that series. So yeah, I mean, I'm excited about that. We've taken a lot of pre-orders for that coin already, and I do expect that one to do quite well. So that would be my pick anyway.
Wonderful. Thank you so much for asking that question.
So just a bit about the direct bullion model. So we do have around about 3,000 clients in the UK. Normally what we find with our business is that people, it's all about trust, especially when you're delivering physical products. So once we have delivered, some people might start small, then just say, look, I want to spend X amount, this is what I want to purchase. We deliver that in a prompt fashion, and then we do normally have customers which will come back, time and time again, and that does contribute to a large part of our revenue. Growth, 125% growth in the last 12 months, market conditions, and also success. But again, 45% of that comes from new clients. We do take a lot of transactions on the website through traffic, so around 70% of the transactions do happen online. But we do have a team of in-house specialists where they are account managers, and if people are buying from them, they are allocated an account manager, and he'll transact, help you buy and sell in whatever volumes you're normally looking for. And we're an authorized dealer for the PCGS, so any coins which are worth getting graded or authenticated, we can supply them coins in large volumes as well. Next slide. So what is our magic? I mean, since we have formed, we have been voted a Spears 500 top bullion dealer, and that's been several years now, I think since 2018, 19, 20, and 21. They are a guide for high net worths and ultra high net worths individuals, and they have recommended us several times, which is something which has helped us massively with our reputation. And I mean, customer reviews, there is some 4 stars and some 5 stars in there. When you are delivering physical products, then sometimes there is going to be delays, it's logistics and whatnot, but we have maintained a great reputation across the board in the UK and in the US with independent service ratings as well. Next. So our competition in the US, so perhaps or perhaps not, you may have seen some of these companies advertised. Lear and Rosland do normally on Fox News, whatnot, several times a day, and other news channels. And JN Bullion are mainly a web-based retailer. We compete with JN Bullion, who are one of the cheaper ones in the market, and we do have a price promise against their products. With Rosland and Lear, I do think that they mainly sell collectible coins and coins which do have a lot more of a higher premium attached to it. So normally, with these coins, it could be quite a while before the gold price goes up to what you paid for it and whatnot. But I mean, our delivery, the fact that we are in the UK, we do have great links globally with some of the best mints and refineries and whatnot, does set us apart from that. Next slide. So as I just mentioned as well, we do have a competitive pricing strategy. We do have most prices online on our website, directbullion.us. And then we do also have institutional rates as well for larger transactions. But as everyone knows, the more that people are buying, some costs can be eliminated, and we always work to try and get people's business in by being price competitive and bringing that price down. We do have parent company support, so we are partly owned by the UK company, partly owned by myself, and they have helped massively with introductions to suppliers, to mints, just from their reputation alone. It has helped, and also financial support from growing the business. It's never easy, but we have had financial support to do that, to be at the level that we are today. And guaranteed supplies shipping. We've never had touch wood a shipment go missing so far, so we're happy with that.
And Sam, we do have a question coming in. What are the different types of precious metals offered at Direct Bullion?
So right now we mainly do focus on gold, silver, and platinum in coins and bars. That is mainly what we're looking for. There is some demand sometimes for palladium, but it's not enough to sort of not enough for us to sort of really promote it or sell too much. But we can have access to most metals that people want. But right now we are primarily focused on gold and silver dominate, and that platinum is creeping up in its demand as well.
Great. And to follow that up, would you recommend buying gold or silver?
It's an interesting question. This year we have seen unprecedented demand for silver. Last year it wasn't that great, but this year, especially since the turn of the year, the amount of people that are interested to buy silver, sometimes solely just silver, is astronomical. I think a lot of that does come from the industrial usages of silver, the green energy push. So, again, it is going to increase the usage of silver, and also supplies, dwindled massively. So right now, I'm active in both, but I think that silver, it has gone up 60% in the last 12 months, which is quite high. However, we are still nowhere near the all-time high that we have seen for silver. Most analysts that I've spoken to recently do have pretty confident projections of silver to go up to $50 by the end of this year, and I think that's achievable. Silver, because it is a bit more volatile, there is normally a bit more of a risk involved. With gold, it is more of a, it's more of a safer bet. It's a bit steadier, and I think that if you are looking for a safer bet right now, I'd probably be looking at gold. If you are a bit more risk averse, then perhaps silver. But we do find that most people, if they're spending any amount of money, $100,000, then you're normally seeing around 85% of that being allocated to gold and about 15% to silver, just as a sort of rule of thumb.
Wonderful. And another question coming in from William. Currently, there is a substantial spread over spot for silver coins. Do you see this as a temporary or a structural change in how silver coins are priced? I think it's a structural change. I think that the US Mint is definitely leading the charge with the premiums going through the roof. I think the UK coins haven't followed suit yet, but we have seen premiums. They've been going up almost every month, and it's something which it's not helping us dealers out at all. It is being commanded by the mints, but people are still buying. And I think that if the demand had dropped off because of the premiums going up, then perhaps it might only be a temporary thing, but it's not. Demand is still there. People are happy to pay right now anywhere from sort of $42 to $45 for an American Silver Eagle, which is spot price is $27. And people are more than happy to pay that. So if they are, then I think it will be a definitely for now, I think it'll be a fairly permanent fixture, and it could even go higher. One of our suppliers, when we was having difficulties getting access to the amount of silver that we wanted earlier on the year, he said, gold and silver will probably become, unattainable before it becomes unaffordable. And we are seeing that slowly creep into play, where you can't buy it and then it will get, a lot more expensive. So yeah, I do think that silver premiums will probably go higher. And it is because, if you look across 10 different sites across the US right now, some of the largest dealers, silver stock is still very low. So why would, how can they put the prices down if they don't have the stock? They will still put it up. Yeah. Great. Well, thank you so much, William, for those questions.
Next slide. So the marketing plan that we currently have, and perhaps where you may or may not have seen us, is that we are broadcasting across several television stations, Fox News, Newsmax, Newsy, OAN right now, and several radio stations as well. We do have a fairly large online presence, so we do have socials, Twitter, Facebook, LinkedIn, subscribes on YouTube as well. And then mail campaigns as well, which we send out regularly. If people are signing up, they'll get newsletters talking about the gold and silver performances, particular offers that we have. And that's a fairly regular thing that we get. But I'd say that right now, most business that we do get does come from some from online, some some from the TV adverts as well that we're currently running. Next slide. And yeah, this is just our team right now. So myself and the vice president. So yeah.
So we do have another question coming in. How would you recommend somebody getting started in investing in physical precious metals?
I mean, I think that it's always best to open up a chat. You know, you want to learn about it before you do it. I think a lot of people, especially when it comes to precious metals, are always looking to sort of dip their toes in the water first. You know, you have that conversation, you know, I'm spending X amount of money, I want to see what I'm getting, you know. And so I think that obviously decide on how much you'd like to start with, you know, place an order really. You know, a lot of people sit on the fence with gold and silver and they've seen the prices go up over the last 20 years and they feel like they've missed the boat. But, you know, it's not always the case. You know, we think that it's always, you know, you should keep rising like the last 20 years. So I think, you know, the key really is to obviously feel comfortable, find a good dealer, get started, pick an amount that you're comfortable with spending, take delivery of it. You know, it's always important, especially with the first transaction. You know, take delivery of it, get a feel for what you've actually purchased, and then after that, you know, building it slowly. I've been buying gold, you know, pretty much every single month for the last 7 years. So that's how I do it personally. But other people, you know, prefer to sort of move funds from underperforming investments into gold. So there's, you know, different ways to go around it. It depends on your philosophy, what your goals are. But I'd always say, you know, start small, get a feel for it, and then after that, build with confidence.
Wonderful.
So Sam, I want to go through some of the notes that I have from your presentation. Let's go back to Basel III and BIS and how Basel III is going to cause banks to buy more gold.
Okay, so it's the fact that they will be buying a lot more physical gold. So a lot of it is really including with the net stable funding ratio. Before Basel III, you know, it was weighted at 0% risk, and paper gold was categorized exactly the same as physical gold. Obviously, what we're noticing is that it is highly leveraged. They're not the same. They shouldn't be held to be the same risk. And so with this ruling coming into place, if it is going to be risk weighted 0 to hold physical gold, then it is going to be a lot healthier for that balance sheet. And also it's going to be a lot harder for banks to offer paper gold as well. So if you are seeing, you know, all the trillions that are normally placed into paper gold into physical gold because it will become a 0 risk free asset, then of course it's going to be great for physical gold. You know, in terms of actual gold buying, you know, it might be the same amount of money, but you're just going to see, you know, it's just going to be very problematic for people to hold unallocated gold. Therefore, physical gold should be in a great place. And if people are doing that, then just going back to the question about the silver premiums, you know, if there is a huge increase in the price of purchasing physical gold, then we can probably expect premiums to go up even higher. You know, and that again, you know, that comes into effect June 28th in the EU, January the 1st in the UK, and that will have a knock-on effect across the world for sure.
Okay, let's get into cryptocurrency, Bitcoin in particular. Are big institutions dumping their cryptocurrencies and coming into gold? You know, is that something that, you know, you've seen as a trend?
Yes, definitely. Yeah. So I know that JP Morgan, after the last, you know, when Bitcoin dropped from its higher points to around $30,000, you know, JP Morgan released an article the day after stating that they are, you know, now advising their clients to move out of cryptos and get back into gold. Some of our largest clients are big in the crypto fields as well, and we do see them, you know, wanting to, you know, we do take Bitcoin as a form of payment. We are seeing a lot of traffic come our way from people selling their Bitcoins and putting it into physical gold and silver. And that is increasing, especially, thankfully a lot of my clients done that before the Bitcoin crash, because perhaps their pockets wouldn't have been as deep, but we are seeing that as a trend. And I think it is because a lot of people, if they have got into these cryptocurrencies, earlier in the day, a lot of them have made a lot of money, but they know the problems with it, and the things attached to it is huge volatility. There are no guarantees with that, and therefore, again, people have made money from it. They are looking for places to keep their capital safe. Then crypto's not the answer right now. You're seeing, I think, a statistic the other day that I saw was 1 in 10 people that received a stimulus check have put it into cryptocurrencies. How many cryptocurrencies are they buying which have since faltered and are now almost worthless? I think quite a lot of them. So that seems to be the case with that. And I think that when you do have any correction in the crypto market, then we do see increased buying of gold, because people are funneling it out, and not all of the people that are selling out of cryptos are putting it in directly into gold, but a proportion are, and it does lift the market.
Okay, so I caught a headline yesterday on Bitcoin. It was a pretty significant one, to highlight the point that you're making. Michael Saylor from MicroStrategies, which is a software company that purchased $500 million worth of Bitcoin at a good price, and he added to that position over time. And they just transferred 92,000 Bitcoins to Coinbase. So from their MicroStrategies wallet to Coinbase, which is, for those of you that don't know, like a broker dealer for Bitcoin. They'll help you to either buy or sell Bitcoin, which signifies he could be getting ready to close out some of that position. Yeah. Which would further highlight the point that you're making about people getting ready to bail on some of the cryptos.
Yeah.
It was just an interesting point that I caught last night. It's pretty considerable, given that's like over $2.5 billion worth of Bitcoin. And, I think that the large institutional players may be losing some of their confidence in crypto right now. And for any of you that are in Bitcoin, these are just, my observations. They're not necessarily direct bullion, so don't hold it against them. So in the conversation, you talked about bullion coins and bullion bars. In the Armageddon situation where everything goes really bad, you personally, where would you rather be, in coin or in bars? And tell us a little bit about your reasoning and logic as to why.
In most recessions, you do normally see a depreciation in collectibles and the demand for collectibles across the board. Whether it's cars, artwork, whatever it might be. You normally do see some depreciation for that. So in Armageddon, circumstances, then you would want bars, because they would be worth the most. You would have paid a lesser amount for them. We have a proportion of our client base are what we would call preppers, and they are commonly buying 1 gram sheets of 50 times 1 gram sheets of gold, which you can break off in that sort of circumstance. And I think that is probably what you'd want. You'd want bars of gold, and you'd want silver coins as well, which would be easily transactable. But again, you need something which which can be used to barter. And that means that obviously not paying too much of a premium on anything, making sure you're getting it, and it's not going to be, if you was to buy all 1 ounce bars and then try to barter with that, it's not really going to work. We're going to be dealing with two.
So Sam, I sorry to jump in. You're talking about a recession, but I'm talking about Armageddon, right? So explain to the people. You have a lot more knowledge than all of us. Explain why you need to have different denominations in the Armageddon situation. And before you do that, we were at the Bitcoin conference, and they were dropping these Venezuelan bolivars out of a helicopter, right? So you could literally scoop up a bunch of these, and they're worthless. I mean, they're dumpsters full of them in Wynwood in Miami, and they were making a point, which I think is a very powerful point to this specific question.
Yeah, I mean, paper money will be worthless as that banknote is in your hand, and therefore you do need something which does have a tried and tested value. And for thousands of years, gold and silver have always had value. Banknotes have not. And if we are in Armageddon, then a dollar is worth nothing. Worth what you can burn it for to create some fuel. Whereas gold and silver will always have that value. It will always be desirable, and you will always be able to barter with that. So yes, in Armageddon circumstances, you need to have gold and silver as part of your portfolio in good bartering amounts, which will be flexible for you to use. Smaller coins, smaller bars, gold and silver for sure.
So would you be able to help somebody properly prepare for an Armageddon situation?
Yes.
Yeah. So instead of having to learn all the necessary things to think about, people should strike up a conversation with you and just say, hey, look, I don't want to think about this type of stuff, right? I don't want to live in a super negative world. Let me tap into your expertise, and you can help set me up in case we do find ourselves in this type of a situation, right? Like the dollar becomes like something like this.
Yeah, for sure. Yeah, I think that we do see a lot of people, and they are concerned about the dollar. I think that we've seen Russia, from their sovereign wealth fund, are looking to dump a lot of their dollars that they hold right now. And there is a lot of fear around the dollar. People are concerned that we could see a dollar crash. And if that was to happen, then you don't want to have any dollars. You want to have as much gold as you possibly can, because the more worthless that dollars are, the more gold is going to be worth. And yeah, I mean, obviously, if you was in Venezuela and you had, you'd saved for years and you'd acquired all these banknotes, and then all of a sudden one day, they're worth nothing, then that's never going to recover. And if the dollar does crash, then that will also never recover. But gold has never crashed. It has always been a reliable protection for your wealth. Therefore, why wouldn't you try to own or keep at least some of your investment capital in gold for that added safety? And obviously, to protect you. And that's why people do it. It's an insurance policy. If you need it, fantastic. If you don't need it, you haven't lost anything. And truly, that's why people should be buying as much as they can.
So the macro drivers of higher gold prices is basically, excess debt, printing of additional fiat currencies, geopolitical instability, problems, conflicts. The price of gold has not skyrocketed through the roof through the coronavirus pandemic. How do you see this playing out? Why didn't it significantly jump? And I know you have a slide in there that talks about the demand for gold in Q1 2020. But like, what's some of the reasoning why it's not up 300-400%, given the amount of money global central banks have introduced to the global economy?
I mean, I think that you have to look at the direction of that capital, and I think a lot of the money printing that occurred, most of those funds did go back into the stock market, and not too much of it has been used to purchase physical gold. So, yeah, I mean, and we do also, as I touched on earlier, you do see suppression of the gold price. I mean, I don't think gold today should be reset and it should be $10,000 or $20,000. I'm always skeptical of people with those beliefs, but I definitely do think that when you start seeing central banks purchasing, then it normally is a signal that there is going to be bigger numbers to come. And I think we saw it just before COVID, where we saw central banks holding and buying as much gold, more gold than they bought since the 70s and 80s. And then COVID occurred and the price of gold hit a record high. It did cool off, but I do think that now that we have seen increased buying again, you never really know what the trigger is going to be to catapult it up. No one would have seen COVID coming, but it did go up quite a lot. So the next thing that will happen to trigger that, I don't know right now. We don't have a crystal ball, but if it does happen, and I think with the Basel III ruling as well, where if we are in another recession or financial crisis, and people do want to purchase gold and they don't have the option to buy ETFs or paper gold anymore, then I think physical gold value will increase quite significantly. And the articles that I've read on this so far, suggestion is between 2,500 and 5,000 for an ounce. So yeah, I mean, I think I don't really know why we haven't seen too much of an increase right now, but I think that gold on average increases by around sort of 10 to 12% per annum. Over the longer term, it's a bit more than that. So we have gone up a bit since the highs of last year. We've recovered that, and I think that in the next sort of 12 to 24 months, it'll be interesting to see where we can take it. But I do think that we are in a bull market right now.
So talk to us about collectibles. I know you touched on it a little bit during the presentation today. It was fascinating how much knowledge you have about collectible coins. Talk to us about the collectibles market and where in an economic cycle like collectibles are the place to be versus bullion.
Yeah, so it was interesting. I woke up this morning and I think there was a double eagle, 1933 double eagle, which sold at auction for I believe 13 million, which is a record, 1 ounce of gold. So there is always a demand for collectible coins. That was the last year of production from when the US was coming off the gold standard. So there is always a demand for collectible coins, and I think that they do have to be the right coins. Not every coin is worth purchasing or paying a premium for. Some, like the Queen's Beast that we started selling in London, about 5 years ago now, they do have such a good track record that we do tell people, if you do want to purchase a thing which does have numismatic value in, then buy that. The pitfalls of collecting are that some companies will sell collectibles that aren't actually collectible, and you're paying a premium for nothing. When it does come to collectibles, you have to make sure that you do know what you're buying. It does have a good track record. They haven't produced a very small amount of them where no one knows about them. They haven't produced too many where the market's saturated. It's about finding a fine balance with it. I mean, before the Queen's Beast, we didn't sell any collectible coins at all, or any limited edition runs. We were selling Buffaloes, Eagles, Britannias, Maple Leafs, common international bullion coins. But because these done very, very well, we did start looking into that, and we started selling a lot of them because they went up quite a lot in value. We had a lot of people, return customers buying each part of that series, and they were all going up. So collectibles are interesting. You have to, from my knowledge on them, I like to buy stuff which does have looks like a safe bet. And I think with some of the collectible coins, they are worth buying. Some of them aren't. It's dependent on what you're really looking at that moment. But the Queen's Beasts, they do have a 5-year track record, so they're a strong suggestion. And other coins, could be sometimes deemed a bit overpriced, premiums are a bit too high.
So Sam, if somebody has gold that they want to liquidate, can they go through you to do that? If they have a collectible, is that something that you're also available for?
Yeah, exactly. So we do have a transparency with our pricing. Our website has live prices which change every 15 seconds, and we do often reference people to say, if you bought this from us, it will be on the website. You can check the price of it, and when we do purchase back from clients, then we are offering a percentage of that market price that we're selling, and it's normally around 95%. So we do offer that facility just so people can obviously sell it, and they kind of know where they're at as well, which is always nice. We do say when you are looking at a limited edition run or something which is deemed a bit more collectible, that you should hold for somewhere between 3 to 5 years as a minimum, just because they do produce coins for sometimes 6 months, sometimes a year. So you want to wait till they have actually sold out, they have become more desirable, and supplies have dropped before the price normally goes up. With the Queen's Beast, they normally start to get more expensive and very hard to buy after around 18 months of them first releasing. So that's normally what we say. But these coins are also attractive for us to buy back, because we know if we buy this back, we can then resell it on, or we might hold them again and resell them on. So we do try to recommend products to our clients, which we do want to buy back in the future, and whether that's collectibles or bars or whatever it might be, that is always in mind.
So we're out of time today, but I want to encourage everybody that joined the call today to send in, your questions, comments, content that you would like to hear more about the gold and silver markets, the bullion, or the collectible space. And I would like to invite Direct Bullion back to do an update on a regular basis. I found today's presentation extremely helpful. And with that, Corinne, I want to turn this over to you so that you can, add any closing remarks, recommendations.
Thank you so much, Michael. On behalf of Direct Bullion, thank you so much for joining us today, everybody. For more information, please feel free to visit our website. It is on the slides below, and it is directbullion.us. Feel free to also visit us on social media platforms. We are on all of them, or give us a call. Our contact information is on the slides below. Like I said, that will be emailed to you along with the webinar recording within 24 hours. Have a wonderful day, everybody. Sam, anything else?
No, thank you for all attending.
All right. Have a wonderful day.
Thank you.